Chinese PMI day is always a very keenly watched part of the Asian trading sessions, and today was no exception. We saw the HSBC flash figures for the manufacturing data of the last month in May coming in ahead of expectations and back into expansion for the first time in 6 months. It was an okay read at 50.8. That was a 1.4% jump from the previous month. It is a flash feed, but what we are seeing is broad-based turnarounds in China. Questions are being asked of whether or not the stimulus that we've seen from the central bank and also from the central government are now starting to feed through, and it certainly suggests, if you look at the output, if you also look at new orders, that could be the case. We're also seeing price action changing the other direction as well. The only sort of negative again remains that the employment current expansion is actually in negative territory and hasn't broken out of that yet, and that's one part to watch. But it did trigger a fairly broad-based buy-up across the whole region. We saw finally the Chinese markets actually moving up. The Shenzhen, the Shanghai Composite and also the Hang Seng all had positive prints till lunchtime this morning. We also saw the ASX in Japan doing quite well indeed. The ASX was the one to watch, considering that their mining space has been hit quite hard. We did see over the weekend that iron ore finally looks like it may have broken out of its current downward trend, jumping up another 1.5% to 94 US a tonne. Good thing to see. And the other one to watch, therefore, was the Aussie dollar, and it is always the currency to watch on this kind of move. Jumped over 0.5% this morning. It's now sitting well and truly above the 94-cent handle and is now only around about 20 to 30 pips away from the April high. And that really does suggest that since we've seen the RBA basically putting a massive floor underneath that current pair with no more changes to what's going on in the interest rates, that is going to probably be the trend in the Aussie dollar, and expectations are starting to switch the other direction. All of that has played into how we've seen trading today. Very much green on screen across the board, and expect that to translate into tomorrow's trade as well. Not a huge amount of news to actually affect what's going on in Asia tomorrow. We do have some minor manufacturing data out over in the US, but again, that's more sort of district specific rather than anything that will affect Asia, and we don't really get any form of major data coming out of this region until the end of the week, and it is those Tokyo CPI data that will be very interesting, along with the whole nationwide CPI, as we continue to watch and evaluate how Abe and also Kuroda at the BOJ continue to move that economy along. However, looking to what we saw today, the HSBC figures for China's manufacturing was better than expected. We saw an expansion for the first time in 6 months, and we actually saw good turnarounds in output, new orders, current orders, and also we saw price input and output also changing direction, which was positive. The only negative was employment, which remains decreasing at the current rate, which may be a slight drawback, but again, that would suggest that the current stimulus we're seeing from the PBOC and also from the central government is going to remain. As I said, the other thing to watch, therefore, on those HSBC numbers was the Aussie dollar. It did jump up well and truly above the 94-cent handle, and that would therefore suggest that we are now going to go back towards that April high, and we've now really snapped out of that downtrend we saw at the back end of last year, as the RBA has made it very clear that it's not going to move on rates, and that's exactly what we're watching tomorrow in Asia.